Wait. Nah.
Okay, folks, the usual thing. Yes, thank you, Jay. Thumbs up if you can see the background behind me. Right. So last week I spoke about starting to plan for next financial year, and I promised that we'd talk about sales. But before we get into there, understand this. I have a couple of quotes that I like using all the time, but this is a very important one. Life is what happens to you whilst you're making other plans. The great John Lennon said that. The other thing is that Michael Altshuler says, the bad news is time flies. The good news is you're the pilot. All of which leads me to this next thing, which is basically your business should support the life you want and not work against it. Too many people, especially when their business is doing less than 200, 250K, end up doing everything themselves. And what happens is they have their life sitting around their business instead of their business sitting around their life. So today, as usual, will be a little bit different. It's going to be a bit like drinking from a fire hose, but hopefully it's going to be a bit of fun. Time's short, so we're going to get into it. So who is this guy? I normally just dash over this quickly, but I had a couple of people yesterday at a function ask me a bit more about my background. Look, it's there. I had 30 plus years as a C-suite executive in Southeast Asia and here in Australia in 12 different industries, right? I've been running my own business for 12 years and I've helped about 180 business owners achieve what they want to do. I'm a certified advisory board chair. I'm an active governing board chair. I'm a community board director of my local Bendigo Bank. I've won some national awards for marketing. I launched the NextG network for Telstra, for instance. Cost them $3 million to launch, and I made them $30 million in 6 months with it. So I do a lot of things. And again, I mentioned this just to let you know you're in pretty good hands. Last week, I spoke about the three options. One option was to become a cellar dweller, which is where you just sit around with your thumb in your mouth and you hope someone comes to save you. The next one was a hoper, where you keep doing the same stuff you're doing all the time and hope things change. The last one was an action taker, where you actually look at your business and you decide to do something different. So if you were here last week, I asked you to make a decision on what you were doing. People were very quiet, although a lot of people stuck their hand up and said they want to be an action taker. My feeling is, though, a number of people are staying as a hoper, thinking that if they keep doing what they're doing, life will change. There is an elephant in the room. Last week, for those of you who were here, I asked you to do some of this dreadful stuff called homework. I asked you to answer this most important of all questions, which is, how much is enough? And how much is enough isn't just money. It's how many date nights, how much travel, how many holidays, how many cars, how many soccer games. How much is enough is the key, should be the key driver for what you're planning to do next financial year. So if you don't know how much is enough across a variety of things, and money always has to be one, you need to sit down and ask yourself that, because until you understand how much is enough to make you feel happy and fulfilled, it's really hard to do things like set sales targets and budgets. I also asked you to do a GBU, which stands for the good, the bad, and the ugly. So what was good last financial year you want to see more of? What was bad? What are the things you want to learn from and maybe try again but do better? And what was downright ugly? The things that you never want to see in your business again. So really, it was like this. Pretty much the last slide from last week was decide what you want for the 2026 financial year, review your last financial year, answer how much is enough, do a GBU, do a business review, decide your priorities for this upcoming year, decide how you want to generate some revenue, decide whether you want to do it yourself or delegate it. And we also said accelerate, which is where you use AI properly. And the other thing was to set up a recurring task list. So if you haven't seen all that, or if you're new to this meeting, please go to the website and look at the recording, and it will give you the idea of forms and all those sorts of things. And of course, if you want the forms from last week, just book a call with me and we'll have a chat and I'll send them to you. Key thing is this: planning is always simple. It often isn't easy, because planning requires you to get all your ducks in a row. And if you've been around in business for a while, or you've read a couple of books, people will tell you this is the sort of plans you need to have. You need to have a business plan, a sales plan, a marketing plan, a profit plan, an IT plan, a business continuity planning plan, a learning plan, a systems procedures plan. You know, it looks like this. God, my personal development plan, then I've got to do this, then I've got to do this, then I've got to do this. And don't forget, you've got to do a digital marketing plan as well. You need an IT one, you need an HR one, you need assets for tangible and non-tangible assets, you need business continuity planning, and on and on and on. Truth is, the plans you need immediately are like this. You need your personal plan. What do you personally hope to get out of the next financial year? Business plan, which is really starts with a sales plan. What do you hope to make next year? A marketing plan. How are you going to tell people about your product and service and make them? Lastly, that will lead to a budget for you. Why does this matter? Why does this matter? It matters quite simply because unless you have a plan, you've got no direction. When you've got no direction, it's very easy just to sit down and settle or just get distracted and nothing happens. The other reason why you need a plan is if you don't have a plan, you can go down the rabbit hole. You'll find something that maybe interests you and you'll find that 3 months has gone by and you've actually achieved nothing, but gee, you've learned an awful lot about how to do Zoom presentations. Maybe not worthwhile. Without a plan, you might just default to multi-hatting, which is what all of us do. We all wear too many hats, but if you've got a plan, at least you can start looking at which things you shouldn't be doing or which things you can stop doing. Without a plan, you run a real risk of shooting yourself in the foot. Without a plan, you realize just seeing the forest and not even seeing the individual trees. Because remember, it's most basic. Your business should be making people happier by solving a problem or fulfilling a need with your product or service. If you're running a business these days in Australia, you must above all else become top line driven. By top line driven, I mean revenue. That's your top line. Remember, there's 3 strategic levers to your business. There is revenue, there is capacity, and there is cost control. Today, we'll be talking about revenue. Capacity is about your ability to deliver on time and on promise the things you promise to your customers, and cost control is, well, controlling your costs. So revenue is the most important thing. But again, people aren't sure how to do it. So there's, unfortunately, some numbers you need to know. You need to understand a thing called ATV. That's the average transaction value. So if you make $1,000 in sales and it was 100 transactions, then your average transaction value is $10, right? You need to understand how much each sale on average gives you. That enables you to start planning your sales and your revenue income. You should also understand a thing called CLTV, which is customer lifetime value. Many of us will have a business where customers come back to us time and time again. So if a customer on average stays 3 years with you or 5 years with you, and they spend $2,000 a year with you, then 5 times 2, they're worth 10 grand to you. So customer lifetime value to you is 10 grand. That can help you with your planning. If you sell one or more product or service, you need to understand the percentage each one generates towards your sales. So all of us will have a hero product, which may give us 50% of sales. We might have a secondary product, which gives us 20% of sales, and a third product and a fourth product that make up the other 30%. But if you don't understand your product mix, it's very hard to determine what products to promote, when and where. And of course, these things lead to you be able to do a simplified budget. Now, I'm not talking about the sort of budget that corporates do that run to 35 pages. I'm talking about a fairly simple profit and loss that will enable you each month to sit down and go, I planned on this many sales and this much profit and this many products sold, and this is where I'm at. And I'll show you a template later on. So I said, your average transaction value is simply your sales divided by the number of transactions that happened. How long a customer stays a customer, that's different for all of us. My customers, on general, stay anywhere between 18 months and 5 years. So I work on that scale. And I said customer lifetime value is the average of money they generate over the period of time they stay with you. Your product mix method is simply this. What's the percentage your products give or contribute to your sales? So if product one's 40% of sales, product two is 20% of sales, product three is 30, there's your 100%. So if your sales target's 100K, under that thing, you're going to be pushing your hero product to get 40K worth of sales, product two for 20, and product three for 30. This gives you the ability to decide your promotions. Now, if you're going to set a sales budget, all right, you can use the average transaction value method, which is where you choose your revenue target, you divide it by your average transaction value, And that tells you how many customers you need and how many units you sell. So again, keeping the math simple, if you've got $1,000 as your budget and you want to sell 100, your average transaction value is $10, then you need 100 customers in order to hit your sales budget. You should check your history if you've been around for a while to see which months are high or low. Here in Australia, December and January tend to be pretty low for most businesses because everyone's on holidays. But some businesses are very seasonal, where they'll find that at the moment real estate is really hitting winter. So July and first half of August is probably the quietest time for real estate in most parts of Australia. So you need to plan for that with your numbers and then plug your numbers in appropriately. So remember, revenue should happen this way for you. You should become top line driven, i.e. sales driven. If you need to, you should increase prices. Nearly every small business I work with is undervaluing their business, and understand this. If you increase your prices by 10%, you would have to lose 25% of your current clients before you would lose money from just doing that. Look at your products. Maybe you've got to add them or cut them down. Make sure they're more useful. You can upsell or cross-sell, sell more to existing clients or get more clients. We'll do something on sales and how to promote sales later on. Here's a simple sales template. And that looks difficult, but it's really not. My hero product is in the top left-hand corner up here. So what I would put in here is I put the price, say it's $100. I put in how many units I sold. I'd put in how much money that gave me. And I would set my budget beforehand. So if I wanted $1,000 and my product was worth $10, I'd want to sell 1,000 of them. But if you track your sales like this, you're going to find it much easier to decide what to do, how to adjust your pricing and whatnot. If you want to go full bore on a sales plan, you can do this. You can make sure you've got a company mission and positioning. You want your sales structure. You want sales goals and targets. That's the key thing for me. You want to understand your target audience and segments if your business is big enough for that. You want to look at your sales strategies. You want to look at your plan support. If you're operating at corporate level, that's really important. If you're operating at the level of most small businesses, it's literally about understanding your customers, the problem you solve for them, and then setting some sales targets and going for them. So if you want to set your sales plan, you do this. You set a sales target. You divide it by 10. Why 10? Remember before I said January and December tend to be quiet months. So you should aim to make your entire year's sales budget in the 10 months from February to November if you happen to have December and January's quiet months. Then whatever you make in December and January, I call that my holiday fund. If I make money in those 2 months, it goes to the holiday fund because I've already hit my year's target from February to November. You should decide your product or service mix or split. What's your hero product? And what other 2 or 3 products, if you've got them, are you going to use to make your sales? If you've got just one product or one service, then it's 100%. That's fine. There's seasonal factors. Does summer affect your sales? Does winter affect your sales? Look, those things. Can you tie in with events? October in New South Wales is Small Business Month. That's a great month for business coaches to be promoting their services, for instance. And then, of course, choose your promotion numbers and the type to drive sales. So how many promotions do I want to run next financial year to drive my hero product? Am I going to do 3 promotions or 30 promotions? Next week, I'll talk about marketing and promotional plans. So really, if you want to improve your chances of achieving what you want next year, firstly, you need to decide how much is enough. Then you've got to decide your sales product, your sales budget targets. You then have to decide what the product mix is. But most of all, you've got to take some action. Unless you take some action on planning, you're not going to be able to stay in the fight. So I would urge you after this, please watch last week's training and this week's. Just don't stick your head in the sand, because I want everyone in 5 years' time to be sitting here saying they're still in business. If you'd like a hand, then I'm here to help you. So's Jay, so's Be Connected World. So a quick recap. There are lots of plans out there you could create. The most important ones, the personal one, the sales target one, and the marketing one, which we'll talk about next week. Understand what you want personally in business in the next financial year. Know how much money you want to make. Plan for 10 months, but deliver for 12. Know your mix of your hero product and your sidekick products. understand your average transaction value and your lifetime value. With those things, you can make a meaningful sales plan. Next time, we'll talk about a meaningful marketing plan, which will include how to plan promotions. If you want a hand, book a chat with me. If you want the forms, particularly the ones from last week, you have to book a chat with me. And remember this is Henry Rollins, another one of my most favorite quotes. You've got no such thing as spare time, no such thing as free time, no such thing as downtime. All you've got is lifetime. Go. So let's have that chat. Have a virtual coffee with me. A couple of people on the call, Kerry, Connie, and some others have already had chats with me. They can let you know what they're like. They are not a sales call, although I hope I impress you enough that you'll want to work with me. I'm going to stop the slideshow and take questions back in the main room. Thank you.